Well, hello friends, Mark Martella here for Legal Briefs. And what I'd like to talk to you about today is I received an email this morning from the National Consumer Law Center advising of a congressional hearing that was going to take place during lunchtime. And it was being held by the House Financial Services Committee's subcommittee on oversight and investigations. And what caught my attention is that the issue was regarding protecting homeowners during the pandemic and examining mortgage servicers' implementation of the CARES Act. Now, right now there are 4.1 million mortgages in forbearance. And under the CARES Act, if someone requested a forbearance, they were entitled to a 180-day forbearance period if it's a federally backed mortgage, and they could request an additional 180 days. If it's not federally backed, there's no requirement that the lender would provide a forbearance, but experience has shown, based upon the testimony, that private lenders have been giving moratoriums of up to 90 days. But my greatest fear, based upon my experience with hurricanes here in Florida and the last downfall we had, is what's going to happen when this forbearance period ends. What are lenders going to do? What hoops are they going to make the borrowers jump through? How are they going to torture consumers to get back into their mortgage? And so in these congressional hearings this afternoon, we heard some of the nightmares that I feared. So first of all, the CARES Act clearly says that if somebody requests, they are entitled to 180-day moratorium, but lenders are calling these in after 90 days. And in fact, a couple of different Congress people testified that they received letters from their constituents where not only are the moratoriums ending after 90 days, but the lender's requesting that the 3 months of payments be made in month 4. An impossibility for these people. So imagine the panic that these people are going through when all of a sudden they're told they have to come up with all this money and thinking they're going to lose their home. Exactly what is not provided for in the CARES Act. And the other big problem that came out of these hearings, at least what I gleaned from them, was that consumers are not being advised of their rights. They're not being advised that they have 180 days and they can request another 180 days if it's a federally backed mortgage. So that's a lack of communication, not only from the lender, but from the government in not promoting this. You know, we're getting all these messages about masks and social distancing. When it comes to the finances, there needs to be some sort of advertising regarding your rights under the CARES Act. And so many people who may be entitled to it are just missing payments because they don't know they have these rights and their lenders are not communicating it to them. So here are the problems that we face now. And this is what I feared when this started. First of all, a lot of 90 days are up this July. What are the lenders going to do? Are they not going to give them the full 180 days? The extra $600 in unemployment benefits are going to end at the end of this month. What's going to happen? And here in Florida, cases are only getting worse. The numbers of cases are getting worse. How are we going to open up? Are more people going to be out of work? Or is their unemployment going to continue without the added benefits? Here's another interesting thing that came out. So I talked about federal loans, but what about the non-federally backed loans? Well, these mortgage servicers, they have to pay out the insurance and the taxes right now. Their cash on hand is going to run out, according to testimony, in 90 to 120 days. What are they going to do? They're going to have to foreclose to liquidate these properties. And another problem is, again, the CARES Act was put together hastily in an emergency situation. There are no penalties for lenders who violate the act. There's no teeth in it. So right now, everything's voluntary. Again, ultimately, the goal of Congress was to keep people in their homes. So here are some of the fixes that were suggested and I agree with during the testimony. One, the government as well as the lenders need to educate the consumers about their rights on the CARES Act. The CARES Act is over 800 pages. The consumer is not going to go online and cull through to see what rights they have. It's the obligation of the lender and the obligation of the government to convey those rights. I try to get out there with these videos, but again, my audience is small compared to the people who may need this. Second, the HEROES Act extends the requirements of the forbearance to private lenders. It was passed by the House with no support by the Republicans. Something needs to be done like that to extend that to people who have private mortgages, because again, after these 90 days, if not, we're going to start to see an explosion of foreclosures. And finally, in order to get people converted out of the forbearance, it needs to be easy. It needs to be streamlined. In my experience in the past, the lenders make people jump through hoops. It doesn't have to be that way. Basically, there's only 3 options, so it's not complicated. The first option is, hey, if you have the ability to make up those missed payments over, let's say, up to 5 years, do that. If you can't afford that, but you can afford your regular monthly payment because you're employed again, take those missed payments and just put it at the end of the loan. And then for those people who cannot do either of those options because maybe they're not making as much, well, then you offer them a modification. Offer them a modification at the lower interest rates that exist now and re-amortize the mortgage for 30 years or maybe even 40 years as they've done in the past. So those are the answers, but it has to be simple. But you know, the lenders, the servicers have to at least provide what Congress provided where they're required for that 180 days and another 180 days after that. So if your lender is saying, hey, 90 days are up, it's over, and it's government backed, which 60% are, you need to start screaming about that. Hopefully you don't need assistance from me, but if you do, please reach out to me. The last option, if everything else fails, in a Chapter 13 bankruptcy, there are a couple of options to also save your home, but that's the subject of another video. If you have questions, if you don't understand the CARES Act, if you don't understand what your lender is telling you, if you don't think it's right, give me a call, 941-206-3700, or shoot me an email at mark@markmartella.com. I'll be happy to answer your questions. Again, I'm Mark Martella for Legal Briefs. Thank you for watching. Be safe, be well.